Energy surge. 9.2% oil surge. WTI crude jumped to $95.29 as Iran escalated attacks on Middle Eastern facilities. This movement renewed global inflation fears and pressured international equities. The US dollar reached its strongest level this year as safe haven demand intensified. Investors now anticipate a potential Bank of Canada rate hike to combat rising prices. This dynamic also shaped a rotation into the S&P/TSX composite as a hedge against AI disruption. Investors are favoring Canadian halo stocks because physical assets are harder to automate. The Toronto market climbed 28% in 2025, significantly outperforming the S&P 500. Trade deficit. Foreign investment in Canadian equities recently surged 132% to a record $17.2 billion. Meanwhile, a different pattern emerged in currency markets as the Canadian dollar hit a 6-day low. The loonie fell to 1.3625, following an unexpected spike in the national trade deficit. A sharp drop in motor vehicle exports pushed the January deficit to $3.65 billion. This figure widened from $1.3 billion in December, signaling persistent pressure on the currency. The trade outlook remains complex as Algoma Steel reported a $1 billion annual loss. This deficit followed a 50% hike in U.S. steel tariffs that crippled cross-border shipments. The U.S. previously accounted for 60% of company revenue before the trade conflict intensified. CEO Rajat Marwah is now shifting sales to domestic infrastructure to mitigate these tariff hits. Investors now await Friday's employment report to see if the unemployment rate ticks up to 6.6%. The Bank of Canada's interest rate decision next Wednesday remains the next critical pivot.